What's up YouTube, it's Matthew here and welcome back to my channel. In today's video, I'm going to show you all a HUD statement for a recent wholesale real estate deal. So I know I got some questions about how a HUD statement looks like, a settlement statement, and how that would look differently for a cash sale or a wholesale transaction. And so in this video, I'm just going to show this HUD statement. I'm going to break it down to different areas of a HUD statement and like where your assignment fee goes and how to read it as a wholesale real estate investor person wholesale. Before we go on, be sure just to like this video, comment down below on how your wholesale real estate business, or if you have any questions. And then once again, you all, link down below if you are interested in booking me as your mentor, as your coach, to help guide you and shorten your learning curve in your wholesaling real estate business, where I teach you how to get wholesale deals, period. All right, that's what I teach you all. The link down below and apply. So let's get right into talking about this HUD statement. All right, you all, here we have the HUD statement. And so this is basically how it looks. This is the paper version of it. And so right here, you have U.S. Department of Housing and Urban Development. That's what the HUD stand for, Housing Urban Development, HUD statement. You have the type of transaction this was, a cash sale. Usually if you're doing strict wholesaling, you want yourself to be a cash sale. You have the file number. If there was a loan number or mortgage information, you put that. Right here, you put the cash buyer's name, because the cash buyer is actually the borrower. I kind of blocked it out a little bit. I did a bootleg sticker thing. But right here it might say something like John Smith. Just something like that, you all. All right, and then right here you have the name and the address of the seller, which is the property that you put under contract between you and the seller. And then right here you have the name and address of the lender, but this is a cash sale, so it's very simple. So right here you have the property information. So you have the property address, and then you have, as you all know, I do market in Chattanooga, Tennessee. That's my market, and surrounding areas around that, like North Georgia, some parts of Bradley County, sometimes up to Knoxville or Nashville. So right here you have the settlement agent name. Basically, this is the title company information. If you are looking for a wholesaler-friendly title company in Chattanooga, this is a really good one. Rely Settlement Solutions, LLC, Rely Title. So this is where they have that information. You have the settlement date. So this happened earlier this month on the 4th, this closing date. If you all see that right there, boom. And then you have like these two columns. So it kind of seems like a, kind of like an accounting balance sheet, something like that. But yeah, basically this is where you have all the information about the numbers of the property. So we have the contract sale. That's how much I put the property under contract for, $75,000. And then this is the settlement charges to the borrower. So this is the cash buyer. This is his extra fees on top of the sales price. So this includes all closing fees and of course our assignment on contract fee. So basically, if because we wholesaled this for $21,500 to him, so that's part of those fees. Right here, this is the seller side transaction. It just says, hey, this is the contract price that you agreed to sell your property for, $75,000. Boom. So as you go down the end buyer side, you have the gross amount due. So that's basically how much is due to him. So it says $96,558. Boom. All right, you all. And then there's no fees for the seller right now. And so that's pretty much what's due to the seller. Then as we go down here, so right here, our particular cash buyer was using a 1031 exchange to fund this deal, to buy this deal. So a 1031 exchange is basically when you sell a property. Let's say you flip a property and you made $77,000 in it. In order to like I guess, avoid taxes, avoid capital gain taxes on that profit, you just use that profit and you put it into your next project or your next investment deal, whether you're buying a rental or buying another flip like this person probably might be doing with this property. So yeah, so you have that 77,000 down there. All right, so that's what he used part to fund part of this. So that 77 went towards the amount due of 96,000. Then from down there, you have a little bit more charges just for prorated taxes and different things like that. So it has the total pay amount now to 78,000 from the borrower. All right, so this came from this and the addition of these right here, if that makes sense for you all. And then here we have the 96 once again, that's due. And then the 78. The 78,000 paid by the borrower is basically this right here. And then he has to come up with $18,460.65 to finish paying off this deal. So as you all see, he spent some money paying for, he used his 1031 exchange to buy this property, and then he had to bring some more cash on hand for the rest of the deal. Let's go back to the seller side. So these are prorated taxes. This is a settlement charge to the seller, $29. And then we have county taxes, city tax and county tax. In Chattanooga, you have city and county taxes, unfortunately. And as you can see, the city tax is actually higher than the county tax. So this reduced their payout amount by $914, right? So they're going to end up getting paid $74,085. If that makes sense. All right, you all. I hope this is making sense. I hope this is clear. You know, I kind of have the paper out right now as opposed to using an online version, but they just gave me a paper copy for this one. All right, you all. So as you go to the next page, you're going to have more information. So this is where you have your assignment fee. Basically, usually right here, if you all see, sales, broker, and commission based on price. So usually this is where you put like realtor information, if this getting paid by a realtor or different things like that, or wholesalers, just like us. So I JV with the wholesaler in town. This is their company's name. This is my company, Stonewater Realty LLC. Since they were finding a cash buyer, they already had a EMD of $2,000, right? So when they got paid $8,750. When I got paid, I got $10,750 because that $2,000 was paid to them already. So that's why it's around that amount. So this is where your assignment fee would go under settlement charges information. That makes sense for you all. All right. So yeah, that's where it goes. I know you all probably had some questions about where does the assignment fee go on a HUD statement and how does it look? And you know, you don't have to really know anything about this because honestly, the title company takes care of all of this. All right, you all? Boom. So now we have some closing costs that the cash buyer, of course, is in charge of. So from the title company itself, you have closing fees. You know, every title company has closing fees. So this is the seller plus the buyer's side. So they usually charge, I guess, you know, if you divide this by 2, that would equal each person's side. And then $325 is the title search, and then $200 for document preparation and different things like that, you know, creating the new deed and things like that. And then you have title insurance right here for $776. Basically, you know, you want to insure your property, you know, no matter what. Then down here you have different fees. E-file, if someone wants to do something electronically. You have the the recording fees, you have the different deeds like this. You have the power of attorney fee charged to the seller. And basically what this is because this property had a power of attorney. Actually, I ended up signing with the daughter who had power of attorney over her dad. Her dad was in an assisted living home. So she ended up signing the contract. So we just had to record that. And so the title company charged the seller a fee for that. Then we're back to the cash buyer. Remember, this side is the cash buyer. So you can see the bulk of these charges, the cash buyer is paying for, all right? So that's where you see there. And so you just have to make that clear to your cash buyer that they are paying all seller fees, seller closing fees. Boom. All right, you have a wire fee, you have technology and handling fee right here. And then down here you have the charges charged to the individual. So you have $29 charged to the seller. So that came out of her $75,000. And that came from the $24 power of attorney fee and then $5 e-file fee. Then you have $21,558 charged to the cash buyer, and basically that includes, you go back down, but go back up, our assignment fees, and then all these different fees like the insurance, the closing costs, the title search, and then the recording fees. And so yeah, you all, that's basically how a HUD statement will look. It's a very long page. It's longer than your regular 8x11 page fee. But that's basically the gist of it. I hope you all enjoyed this video. Be sure to like, all right, you all. Comment down below and subscribe, and I'll talk to you all later.